is our pleasure at ICICI Securities to host Q4FY22 results conference call of Bajaj Consumer Care Limited. The management is represented by Mr. Jaideep Nandi, Managing Director, Mr. Dilip Kumar Malu, Chief Financial Officer, and Mr. Richard D'Souza, General Manager Finance. I now hand over the call to Mr. Jaideep Nandi for his opening remarks, post which we can have the Q&A session. Thank you.
Thank you, Karan, for hosting this call, and good morning from India. Along with me, Mr. Malu and Richard, we have some of our senior colleagues from the management committee with me. Let me take you through the performance of the company for Q4 and FY22 before we open the house of questions. The unprecedented inflation in the economy due to steep rise in material prices continued to impact disposable income as well as consumer spending adversely. While we are slowly seeing some recovery in demand, the last quarter of FY22 remained subdued. The hair oil industry was not spared, with the overall hair oil market declining by 6.5% against the same period last year. The Hindi-speaking markets, where we have a larger presence, continued to decline faster, while the markets of Maharashtra, West Bengal and South, which fared relatively better, also experienced a slowdown in Q4. The company reported a sales turnover of 216.1 crores for the quarter, which was lower by 10.7% on a high base of 43% growth last year. The CAGR for 2 years for the quarter was positive 13.2%. The volume decline for the quarter was 9.8%. On a sequential quarter basis, the sales were lower by 4% over Q3 of FY22. For the full year FY22, the sales was at 865.5 crores, a decline of 3.6%, while the volume decline was a little over 1%. The hair oil sales value was lower by 0.8% on a full year basis, while we had a volume growth of 1.3% in overall hair oils for the full year. With high dependency on LLP and RMO, both of which are witnessing unprecedented inflation, the company's gross margin continued to be adversely impacted in spite of price increases totaling to 7% taken during the last 5 quarters in ADHO. LLP and RMO prices for the quarter were 27% and 41% higher respectively over the corresponding quarter of the previous year. The gross margin for Q4 FY22 was 56.2% as against 60.6% in Q4 of 21. Against the previous quarter, Q3 FY22, where the gross margins was 55.4%, we had a 80 basis point improvement in gross margins. LLP and packing materials have been volatile and inflationary due to surge in crude prices on account of the Ukrainian crisis. This uncertainty is expected to remain till the Ukraine crisis is resolved. For RMO, while the crop in India has been extremely good, the prices have not corrected due to global factors. The ban in export of palm oil by Indonesia, the impact on sunflower oil from Ukraine to Russia, and the lower crop of soya in Latin have impacted the overall edible oil complex. We will continue to keep a close watch on commodity prices in the coming quarters as well as the competitive landscape, and we will take price corrections as and when necessary. The company...
Ladies and gentlemen, it looks like the management line is just disconnected. We request you to hold the line while we call them back. Please do not disconnect.
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर ठेवला आहे. कृपया लाईनवर रहा. The person you are speaking with has put your call on hold. Please stay on the line. आप जिस व्यक्ति से बात कर रहे हैं.
Ladies and gentlemen, thank you for your patience. We have the line for management reconnected. Thank you.
Sorry, the line had dropped, so I'll just pick up from the pricing of the raw material prices. LLP and packing materials have been volatile and inflationary due to surge in crude prices account of Ukrainian crisis. This uncertainty is expected to remain till the crisis is over. For RMO, while crop prices in India have been good, the prices have not corrected due to global factors. The ban in export of palm oil by Indonesia, impact on sunflower from Ukraine, and lower crop of soya in Latin America have impacted the overall edible oil complex. So we will continue to watch commodity prices in the coming quarters as well as monitor the competitive landscape, and we will take pricing corrections as and when necessary. The company continued and will continue to invest in its brands, including new launches for long-term growth. A&P spends for the quarter was 19%, which is 1.2% higher over the sequential quarter. The EBITDA for the quarter was 38.6 crores with a margin of 17.9%. PAT for the company was 38.4 crores against 53.9 crores for the corresponding quarter last year. The EBITDA for the quarter was down by 7% over the previous quarter of Q3 22. As we have been witnessing for the past few quarters, consumer downtrading continued for the quarter, especially in premium hair oils. There has been a decline in hair oils across categories, including coconut and amla in Q4 22, while the premium categories have witnessed a sharper decline. With slowdown in rural markets as witnessed in Q4, as well as the key wholesale markets in the north, east and central parts of the country continue to see reduced business volume. Our company had a double-digit decline in wholesale, a single-digit decline in rural, while retail continued to grow in the quarter as well. The company took a one-time intervention to rationalize wholesale price uniformity across states in January, which affected January sales but had its desired impact. February, March and April have all had sequential growth since. With improved pricing, there is a renewed focus on wholesale to regain distribution back to pre-COVID levels. Expansion of the wholesale loyalty program and its extension to rural markets is also being taken up. Retail, which has been the focus area of the company where various initiatives are underway, grew by 3% for the quarter, while on a full year basis it grew by 10%. Retail is being further strengthened across top towns with a new retail activation program being rolled out to increase focus in the top urban cities. Both modern trade and e-commerce continue to scale up as per plans. While the January event was not as high as expected due to muted footfalls, February and March saw very good revival in sales across chains, leading to 13% growth for Q4 in modern trade B2C. Bajaj coconut oil got listed in all major chains like DMart, Reliance, Star Bazaar and many other local independent chains. Our Fanker Pay with larger packs of various products have worked well across these retail channels. Our in-store execution is being strengthened along with improved store visibility. E-commerce continued to scale up well with growth of 50% in the quarter and around 80% growth on a full year basis. Strategic exclusive SKUs and digital first brands for the channel continue to drive growth. Digital brands Native Soul and Bajaj 100% Pure have started well. In rural, various efficiency initiatives through technology interventions has helped us optimize van operations as we look to improve brand throughputs. With portfolio expansion in progress, the focus has been to seed some of these newer brands in the rural markets as well. ADHO continued to be supported across TV, social media platforms and media and print media supporting key markets with increased investments in advertising during the quarter. The new youthful thematic campaign dialing up the element of style has started getting positive reviews across younger consumers. The campaign has been integrated for both traditional and digital media. The new commercial on TV is performing better across both memorability and messaging parameters. Digital marketing for ADHO is being continuously dialed up, and we are now actively using new age influencers to reach out to younger customers. Expansion of the hair oil portfolio continued with further launches in Q4. During the quarter, the company launched its product in the category of value-added coconut hair oil with its brand Bajaj Coco Onion across the country. This product is the first of its kind to be launched in general trade as well as across modern trade and e-commerce, with 5 SKUs being launched from rupees 20 for 45 ml, 52 for 90 ml, and right up to 195 rupees for 350 ml for modern trade. Onion is amongst the newest ingredient preferred by consumers, especially younger consumers, and is a time-tested and trusted ingredient which stimulates growth. Bajaj Coco Onion Hair Oil campaign featuring Ileana D'Cruz started from 15th April 2022. The campaign has TV, digital, and in-store visibility campaigns. Both Bajaj Pure Coconut Oil and Bajaj Coco Onion Hair Oil have been rolled out across the country in February and March 22 respectively. Bajaj Pure Coconut Oil has started showing good traction across all channels, including GT. The Amla portfolio for the company grew by 14% in the quarter and 32% in the year, with the share of Amla Aloe Vera touching 3% in quarter 4. Distribution scale-up and other in-shop initiatives planned in Q1 will continue in the category to carry on the Amla growth. With the broad basing of the hair oil portfolio, which now includes the 2 Amla brands, both Amla Aloe Vera and Sarso, the launch of pure coconut and value-added coconut, the total addressed market for the company in hair oils have more than doubled from 35% at the start of FY22 to more than 83% of the addressable market by the beginning of FY23. The launch of premium range of almond drop extensions in hair and skincare has been initiated with the launch of Bajaj Almond Drops Almond Plus Argan Oil in March, with the product being priced 100% premium to Almond Drops. Further new products are being rolled out under the Almond Drops umbrella with two launches, one each in skincare and hair care being planned in Q1 FY23, with further launches stated during the course of the year. Our digital first premium brand in hair and skincare, Native Souls, for 5 additional products launched in the quarter, increasing its portfolio. The other digital brand, Bajaj 100% Pure, saw the launch of Kalonji along with castor, jojoba, and olive oil, which were launched last quarter. Both the brands have seen good consumer reviews and the initial offtakes are encouraging. Launch of new products in both these digital brands will continue in FY23, as well as these being an integral part of the e-commerce strategy as we scale up further activation and support in e-commerce space. Digital marketing in March on Native Souls saw social media posts reach 1 crore, while Google search display had a 16 crore impression. Influencer posts touched 1,500 posts in Q4. YouTube long format campaign started from March and had 4.7 million views. Bajaj 100% Pure Oil also saw a good traction with a click-to-conversion rate of 9.63%. In the international business, Bangladesh grew by 36% in the quarter and 55% in the full year over last year. The economic situation in Nepal, unfortunately, has worsened in Q4 with non-essential imports being banned in March, impacting demand. And in Middle East, we are doing significant changes in the infrastructure and business practices, which will ensure enhanced business delivery from Q1 of FY23 onwards. The ESG initiatives to reduce carbon footprint, greenhouse gas emissions, especially in case of packing materials, continue to progress well. There is a reduction in consumption of approximately 16% in glass bottles, 7% reduction in paper, and 14% reduction in laminates through optimization and rationalization of specifications during the year. Currently, bulk of the material in our packaging material is recyclable. We have successfully completed trials of recyclable laminates for commercial production. As part of our extended producer responsibility, we have collected and disposed of 100% of plastic as per our commitment. Conservation of natural resources like water, reduction of carbon footprint, wastage at factories also remain key focus areas. Water conservation efforts saw us measuring water consumption sources, installation of controls at critical places, helping us reduce 27% of our consumption in second half of FY22. Optimization of transport led to reduction in distance travel per liter of finished good by 10% in FY22. We have now been certified as a great place to work by the GPTW Institute for the 4th consecutive year with improved scores across most functions in the company. The company has also embarked on sales capability development programs for frontline sales for range and multi-category selling. So while the market conditions have been challenging currently with unprecedented inflation and subdued demand, the company will continue with its mid to long-term strategic direction of expanding its distribution footprint, build a comprehensive hair care portfolio, further launches in the premium hair and skincare range under the Almond Drops umbrella, and scaling up the digital-first brands Native Soul and Bajaj 100% Pure. Along with this, investments in these new brands in both conventional and digital media. We believe that as the market conditions improve, this will help us to achieve a long-term sustainable, profitable growth for the organization without being over-reliant on ADHO. So with that, I end the opening remarks and open the session for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, sir. Just wanted to know, out of the total ad spend this quarter of about 40-odd crores, how much of this is on the new launches? I mean, how much of it is, let's say, excluding ADHO?
So roughly about, at this stage, it is roughly about just about little less than 10% on non-ADHO, but that should be keep picking up. Last quarter, we wanted to go little stronger on ADHO itself because in Q3 our ad spends were much lower. So last quarter was mainly on ADHO.
And going ahead, what percentage of your ad spends will be non-ADHO in your view? Let's say for FY23 as a whole.
So we are looking at about 25% spend as far as non-ADHO portfolio is concerned.
And of this 25% universe, how much of it do you think would be digital?
I think if you look at it might go up to 30% based on what traction we see as far as. So just to give you a perspective on overall overall basket of ad spend, there'll be 3 baskets where we'll be spending. One is on ADHO itself. 2 will be 2 brands as far as general trade is concerned. One is obviously Bajaj Coco Onion. There'll be another brand which we are launching. So in these 2, some money will be spent, and there'll be a third leg which will be on the digital media, which is basically Native Soul and 100% Pure, which will actually cross play along with some of the digital spends that we'll be doing in some of the other brands as well. So in that, if you see, roughly we are looking at about a 10% spend going to let's say the digital brands, about a 20-odd% going to, let's say, Coco Onion and the other brand that we are looking at, and about 70% remaining with ADHO. This is roughly the breakup. These numbers will keep changing. I mean, these are not absolute numbers. These are just tentative.
Understood. So basically the non-ADHO spend, which is currently 10% and it goes up to 30%, does that increase your overall ad budget, or do you think that you would be able to accommodate within this approximate absolute number of about 40 crores per quarter or something like that?
No, as stated earlier, we have stated that we will be increasing our ad spends anyway by 2.5% to at least 200 to 250 basis points in this year at least. Yeah.
Okay. And as far as sorry to belabor this point, but last sub-question on this, as far as ADHO is concerned, why do we spend so much when basically the entire hair oil industry has no demand right now? Even if I look at, let's say, a Marico or a Dabur, for the quarter on a 3-year CAGR basis, the sort of sales is flat. So it's clearly an industry issue where the consumer is just not prioritizing this category. So at this point of time, what is the need to advertise ADHO so aggressively?
If you look at the last 4 years data, and if you were to look at the larger of the hair oils, you will see that we have taken a price premium amongst them from, let's say, from FY 2019 to FY 2022, if you were to look at, we have significantly upped our price premium against that. I mean, that itself might have some impact, but we would like to have this price premium on ADHO because we feel that this is something that we will want to defend. So to defend this, we would like to remain in this advertisement so that at least we are able to defend the price premium that is there. And clearly we can see that when we are splitting our advertisement between digital and the non-digital media, this is the bare minimum GRPs that we would like to have across markets of interest for us. I mean, we have some specific numbers that we would want to target as far as ADHO is concerned. We would like to remain there.
Understood, sir. Next question is on margins. Given that we probably have not seen the full impact of the cost inflation post the Ukraine war, etc., and also given the fact that you want to increase ad spends by 200 to 250 basis points, at what level do you see the EBITDA margin bottoming out for you?
The EBITDA margin for the next 2 quarters will go a little lower. There's no question on that. But we feel that over time, these price corrections, at least the RMO part of it and even LLP part of it, will get corrected by the next 2 quarters. So I think we should see more of a evening out of the EBITDA by the end of the year.
Understood. But in the interim, in the short term, any sort of idea how bad it can get? Like if we are at 17, can it go only to 15 or it can go closer to 10 also? And secondly, in the slightly longer run, let's say towards the end of FY23, what kind of margin do you target at that point of time?
See, I would not like to get into quarter by quarter because it is pretty volatile at this stage. So it's very difficult to comment as to quarter by quarter how the EBITDA margins will pan out. By the end of the year, we should be targeting somewhere close to what we are currently or maybe a little lower.
Okay, understood. Yeah, that's all from me. I'll come back in the queue if I have more questions. Thank you.
Thank you.
Thanks, Bal.
We'll take a next question from the line of Sirish Pardeshi from Centrum Capital. Please go ahead.
Hey, hi, Jaideep, Malu sir, Richard, good morning. Thanks for the opportunity. I've got 3 questions. The first question is in continuation with the previous participant. You said you have taken about 7% price increase. So if you can quantify what is the current weighted inflation we have, and against that, the 7%. So basically, I'm trying to arrive what is the gap.
No, so you're saying, see, there is a material cost impact. Are you talking of the material cost impact that is there and the breakup of the material cost impact? Is that what you're asking?
No, I'm saying with the material basket, RMPM put together, what is the
breakup of the material cost basket? So roughly, if you ask me, there has been a 6% gap that you see between, let's say, FY last year versus FY this year, from the material cost going up from 36.7 to 42.7. So that 6% comes from roughly about, LLP comes to about 3%, packing material is about a percentage point, RMO is about 1.5%, and the mix is about 0.5. So this is very roughly the breakup.
Okay. So if that is the status, do you think there is a merit that we can take price increases, or do you think now the category is also seeing the headwinds, so it's not the right time to pass on the inflation at this time?
At this stage, as I said, if you look at last year, if you look at, we had taken price increases against the larger brands in hair oils, while they have remained much more muted. So hence, at this current stage, with what is looking at demand, we are not looking at price increase immediately. In future, maybe in the next quarter or so, we'll see how the demand conditions remain. We are aware that there's been a good monsoon, and we are seeing a bit of recovery in demand. If that happens, we'll see how to take that forward. But immediately, in the very immediate near term, we are not looking at a price increase, not in ADH.
Okay. My second question is on the distribution front, and we had Almond drop, then we had small representation in Amla, and then we ramped up Amla with aloe vera and then sarso, which has come. In addition to that, now you have Vacno and other extensions. So how do you think one should look at the distribution angle and whether the sales is ready to take this kind of broad portfolio? Because I think when you have a single brand, your skill set with the retail and even distributor would be more dependent on jo fast bikta hai. So when you have a range, do you think any efforts are made on that? Of course, you have a van sales which is there, which is complementing. But in a medium to long term, are we making some changes in the field force?
I think absolutely a fair question, because see, in van sales, if you look at van sales, will only cover most of the rural SKUs, and some of these higher premium range of products would actually be pushed through your urban retail mainly, and a little bit in the larger rural towns. So one of the things that we have been working on just on this direction is basically our work that is happening as far as retail initiative is concerned. As of now, we have about close to 3 lakh retail outlets, a little less than that. And that is what we are trying to ramp up further going forward, as well as to retail activations and loyalty programs, which pushes that retail part of it as far as distribution is concerned. On the other side, a lot of work is happening as far as the sales training and inputs are concerned, as far as the entire sales force. We have engaged external agencies to work with our sales team to look at multi-category selling, as well as range selling itself. Because transferring from a ADHO selling to a multi-category selling is a skill set by itself. Fortunately for us, there have been senior leaders and also mid-level leaders who have come from outside who are used to this category selling. So that is adding value to that entire thing, and that we are seeing good traction happening. Already in the last 2 months, we have seen some improvement happening in that direction, and I'm quite confident that this will only improve as we go forward.
The sub-question on this, that we are also trying to end up with Vacno at the premium end, and we have launched even Almond drop at the premium range. Do you think the premiumization strategy, because I'm just relating to the numbers, what you mentioned, the category decline is much sharper in the urban markets. So how one should look at in the medium term, whether these all efforts will yield the fruits faster, or you will take the spread maybe another 4 to 5 quarters?
See, it's a question of what you want to target strategically as an organization. We are looking at building brands which will give us larger gross margins over a period of time. If you look at even the value-added coconut, the Bajaj Coco Onion, it has gross margins which are very close to ADHO, a little lower obviously, but closer to ADHO. And we would rather want this kind of brands to get established as an organization, rather than have the flanker brands or other rural portfolio brands which will not give you, even if you scale up a lot, they will not give you any gross margin to play with. So ultimately, as an organization, we have always remained a very ADHO-focused organization. Our entire performance has dependent on the performance of ADHO. That if we have to break that shackle, we need to invest and we need to develop some premium brands where by over a period of 3-4 years, we have at least 2-3 brands which are giving us gross margins as well. While we will build volumes through the amlas and the coconuts of the world, and coconut incidentally is also a pretty decent margin for the value it is. We would like to develop some of these premium brands so that at least we have a portfolio at the end of 3-4 years to go with.
Okay. My last question is on all these new products, starting from aloe vera to last one is the premiumization of Almond drop. What is the contribution of these products? I mean, not quarter on quarter, I'm saying, for a full year if we can break it out. And out of these 4 new products, what you have launched, including Native Soul, which you think looks promising, and next 2 to 3 years, if I may put a number, say 50 crore mark, which brands you think which will cross 50 crore?
So I would again not get into the number game right away at this stage, but if you ask me, the three brands or the 3 buckets that you talked about, all 3 play a different role as far as our company is concerned. The value-added coconut is basically our strategy to get into the entire hair oils market through 2 routes. One would be the brand-led investments, which is Almond drops and the Bajaj Coco Onion, which will be brands that will be established, and the other will be where we are exploiting our distribution reach, which is through our coconut, through our Bajaj Amla Aloe Vera, and through our Bajaj Sarso. So that completes the hair oils portfolio, and I think all these brands have a good potential to reach the kind of numbers that you are talking about. The number of years we'll have to see, but most of these brands have that potential. You move on to the Bajaj Almond Drops extension. That is something that we have been working on for a long time. This is not something that we just wanted to launch in a hurry, because there's more a method to the madness that we want to be there. And now the portfolio is more or less ready, and you will see the launches happening. Now, obviously, because of the same point that all of you are saying, which is basically the amount of investments that we can do, we will have them as graded launches. So some of the brands will get launched this year, and some of them will be next year. But the Bajaj Almond Drop umbrella is something that we would like to push for on a much larger scale as situation improves. And these are all in the premium range, and some of these brands do have a potential to cross the numbers that you are talking about, some of the products in that entire umbrella. Native Soul and 100% Pure are brands that we will keep scaling up. I don't think they'll reach the numbers that you are talking about in the very, very near future, but we have some other strategic thought process as far as these brands are concerned. We'll see as they come back.
Thank you, Jaideep, and all the best to you. I have more questions. I'll come back into you.
Thank you.
Thank you. Before we take our next question, we would like to remind participants to ask a question, you may enter star and 1. Our next question is from the line of Deepan Shankar from Trendline Portfolio Management. Please go ahead.
Good morning, everyone, and thanks a lot for the opportunity. So firstly, wanted to understand this premium hair oil category for industry. How was the performance for Q4?
So overall, the decline was about 6.5% in the premium hair oils category.
Okay. And so secondly, so for the last 2-3 years, we have been seeing that wholesale segment for us has been declining at more than double-digit terms. So when are we seeing that being arrested for us, or are we having a higher proportion of wholesale terms as compared to industry? So even if the industry turns favorably, so are we in a better position to improve our volumes in terms of wholesale?
So answer your question, our component being higher, yes, traditionally we have had a higher component as far as wholesale is concerned, roughly about 5 to 10% higher than that in similar categories, because that's how traditionally we have built our brand to a more wholesale dependence, and that's why our retail presence in urban towns have been relatively lower. So the focus in the last 2 years have been to ramp up retail. Obviously, the focus was not to drop wholesale, but during COVID period, we were maximum impacted because during COVID period, a lot of wholesalers had dropped down, which we are now trying to gain back. If you look at today's distribution, if you look at Q4's distribution of retail, wholesale, and the rural market, as we call it, it is actually at 25-25-50 in terms of the breakup, which earlier used to be 20-30-50. Those are the kind of numbers that used to be. So yes, wholesale as a salience has dropped down. Retail has gone up, but retail is a planned activity. Wholesale is where two things have happened. One is during the COVID period, there has been quite a bit of disturbance as far as the wholesale markets are concerned, and there are a lot of pricing stability that happened across states, a lot of infiltration. Those corrections have been done in January. We took a one-time hit in January, and I think clearly we can see the fruits of it, where the prices in wholesale has improved much drastically, and wholesale has started to show much better performances in the last 2-3 months that we are seeing.
Okay, so going forward, if industry improves, we could see, along with the industry, we could also improve volumes.
I would think so, because if you look at, I think as far as retail and the rural markets are concerned, urban retail and rural markets are concerned, clearly we are seeing we are better off than where we were maybe 2-3 years back before pre-COVID period. In rural, the van penetration has obviously helped. Now we are a little better off in terms of rationalizing them, in terms of technological interventions that we have done with GPSs, etc. So the van throughput efficiencies is what we are now looking at. So that has clearly moved the needle as far as rural markets are concerned. Retail, there has been a clear focus for the last 8 quarters, and that is clearly showing as far as our results is concerned. It's wholesale where we have dropped our ball a bit, and that is clearly one of the focus areas for the company in this year.
Okay, sir. And lastly, so what is the kind of growth we are expecting for FY23 in terms of revenue?
Let's hope that the market improves. I don't think we'll be able to give you a clear number as far as the growth numbers are concerned. We have internal targets which are pretty ambitious, but we'll have to see that the market conditions also improve and our strategy also need to go right. So at this moment, I am quietly confident that we should have a good year as far as top line is concerned this year.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. We'll take a next question from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah. Good morning, sir. Thanks for giving me the opportunity. So my question is on the market share. We have around 10% market share in overall India. So now, since our portfolio has increased and now you are covering around 83% of the overall hair oil, industry. Where do you see your market share, going up to? Do you have any specific targets? I don't want from next 2 years perspective, but over the next 4 to 5 years, where do you see your market share, improving?
So that's a good question. In fact, that is the purpose where we wanted to be now, that at least we are playing in all the hair oil categories or the entire categories. We'll have to also tone down and tone up our expectation based on various other parameters as well, in terms of what kind of spends we would like to do, what kind of EBITDA margin we are making, etc. So as we scale up other brands that we are wanting to invest in, we might do a little bit of jugglery in terms of the distributed brands, the brands that we are pushing through distribution. So ideally, our objective would be to scale up Almond Drops, scale up all the brands that we are advertising through where our EBITDA, where our gross margins are higher, and we will like to keep the other portfolio a little balanced. So we have a decent expectation as far as market share is concerned. I would not like to quote numbers at this stage because there will be a function of many other parameters. But yes, in terms of our own internal growth, we have some ambitions.
So related question to that is with your, the target or expectation of increasing or scaling up the brands, do we also need a scale up in operations? So are you looking for capacities, capacity additions in some of the geographies from where you can have a much better distribution of your products?
Okay, that's an important question. In fact, a lot of work has been happening at the back end in terms of both streamlining our manufacturing operations as well as making it far more efficient. In fact, just to give you a number as far as manufacturing and supply chain initiatives are concerned, we saved about 5.9 crore rupees through about 2021 initiatives. Large part of it was obviously in terms of supply chain, in terms of a lot of rationalization that we did. One of the other things that we did was in terms of which manufacturer, which is the best plant fit for each depot location. The 10% reduction in transport cost that we did was a lot of algo that was done in terms of connections from each plant to the depots. Now, as we scale up, we are also looking at next 5 years, what kind of numbers we are looking at from which region, and hence accordingly, how the manufacturing footprint of the company should be. As you are aware, Guwahati plant, which is still under the GST benefit regime, will be there till 2027, that MAT benefit that we are getting. Now, as that goes off by 27, we are also looking at how we can bring the manufacturing facility closer to the markets that we operate and closer to the import locations for the imported products, whereby the movement of raw material and the movement of FG is the least, both put together. So these kind of rationalization are happening, and as a result, there will be some investments that will be made as far as our own plant is concerned, while we also set up a robust manufacturing facility as far as our 3P and 2P other third-party, second-party operations. Yes.
So, sir, any specific number you want to, give in terms of capex for next 2 years, or it is too early and once the scale-up happens, then only you will be able to give us any numbers?
So while we are crunching numbers internally, I would not like to talk of numbers right away, because these are all in still the drawing board phase, and based on how the market reacts and how our brands get traction, etc., we will also be building the facility. So the requirement is still couple of years away, so we have the luxury of time. So in that time, in the next 2 years or so, I think we'll have a better view of where the manufacturing blueprint lies.
Right, sir. Sir, and one last one on the international business. So what is the current contribution if we look into the FY22 numbers, and, whether we are looking to add, many geographies so that the even international business would scale up parallelly with what your strategies are for the domestic business?
So the international business contributes to about 4% of our total business. But over time, I think we have some focus areas. Again, I would not like to talk of exactly what we are doing at this stage. Maybe in this year, we should see some movement as far as the international business is concerned. We are looking at 1 or 2 markets where we would want to press on the pedal. So that's where we are focusing on. The last 2 years, we had said that international will not be a focus area for these 2 years. FY22-23 is where we would like to take up, and that's what we are going to push. So international business, just as a small correction, international business is about 3% and not 4% of our total.
Right. And NPD contribution is how much, sir? New product contribution to your revenues?
At this stage, again, very little, because as of now, we have just started. ADHO still remains 90% of the portfolio, because we have just started investing in the new products as of now. So the contribution of ADHO has gone down from 93% to about 90% by this year. But this year, you should see a significant change in that.
Right. But that would be largely with Amla's contribution going up. Not the new brands which you have recently.
Not really. So Amla will continue. Amla has already done whatever it had, and there'll be some more push, obviously, as far as the Amla is concerned. But I think the overall other new products should see a big difference in the total number.
Okay, sir. Thanks for the understanding, and all the best for your future projects.
Thank you.
Thank you. We'll take a next question from the line of Vidhi Shah from Yes Securities. Please go ahead.
Yeah. Hi, am I audible?
Yes.
Yeah. Hi. Morning. Thanks for taking my call. So the first question is Native, the new launch that you'll have. It kind of spell checks on Amazon, and it provides wrong results, either NITIV or NAVY. So since it's a D2C brand, direct to consumer, is management kind of aware of addressing this actively? And my second question is on the PAT side. So would it be safe in assuming that the company's new launches and the related investments are kind of having a impact on PAT? And would the pressure on because of the new launches that have come on PAT continue for the next 1-2 years? And if so, is it safe to assume that 140 to 145 crore of PAT is a new base that we formed, and is it going to continue going forward? And if so, why?
Okay, so 4 questions as I see it, and I'll answer the first question first. So Native Soul is how we wanted distinctly the brand to be, with a NATYV, and we are well aware that in a search, NITIV, etc., will come in, and that's where 2 things are happening. One is we are actually buying the NATYV and pushing the search to NATYV, as you would see when the search happens. And the other thing is, as we build up the brand, the NATYV, Native itself will become popular, which we are also seeing as a part of the traction. So this is how Native goes. So this was something that was thought through, and this is how we want to play it out. This was a planned launch in that manner. Coming to your brand and what it will mean in terms of the EBITDA moving forward and the PAT moving forward, you are absolutely right. The question for the organization stands simple. Whether we remain in ADHO and keep trying to push ADHO beyond a certain level. Now, given what the market conditions are, you will always be slave to both market condition as well as to the material cost. And you will have to break the jinx at some point of time and hence move forward so that you have a multiple basket to play with, not only possibly in hair oils but also across categories, which is what we will be trying to develop over the next 2-3 years. Yes, there are no magic bullets, unfortunately, hence investments in these brands will happen and they will be for a short term a little bit of an erosion of the EBITDA, which we'll live with. But we assume that the kind of work that has happened, these brands will start scaling up over the next 2-3 years and we'll see a reversal of the EBITDA numbers as well. We also expect that the material cost will not remain. Now, these are absolutely an unprecedented high. The question is whether we would want to ride out the material cost and the demand situation to improve and then start investing. There is never a right time to invest. So we have taken a decision that we invest now so that at least the investment starts and by the time the cycle turns, at least we are in a better position rather than start afresh at that stage.
Sure. Thank you, sir.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. Our next question is from the line of Sirish Pardeshi from Centrum Capital. Please go ahead.
Hey, hi, Jaydeep. Thanks for the opportunity. I have 2 questions. One question, when I look at last 2.5-3 years, I think there was clear-cut downtrading. People were downtrading to Amla and low-cost value-add segment. Now the assessment says that even Amla is also declining and coconut is just managed to flat. Just wanted to understand in your lens and in your assessment, what exactly are the problems the hair oil industry is facing? Is it that the status of hair oil is still discretionary and people are not spending on it? Because when I see last 5 quarters now, I think fairly people have started going back to and economies also recover. But still hair oil typically has not improved. So maybe if you can help me to understand what are the problems which we are facing.
So if you look at Amla as such, Amla and coconut, it's basically also because of the quarter impact that was there. Last year quarter was a very high quarter for most of these products. So Amla and coconut is more of a temporary phase. I don't think there is too much of a thing to be read into the growth of Amla and coconut for the quarter. It's also a bit of a base correction. So I don't think that is something that is going to change over a long period. Now, hair oils as a category, we are aware, is not one of the highest growing categories or will not be a high growing category. On the other side of it as well, we don't see the category just vanishing off in a very quick space either. So there might be a little bit of a decline that had happened, but when the overall economy and sentiments go up, we have seen the hair oils market has also been pretty resilient and it does come back. It will not be a sunshine industry whereby the growth will be very, very high. But the market will remain resilient. The 1,300 crores or 13,300 crores that Nielsen reports, the market will more or less be somewhere there. So while that hair oils market will remain and we'll keep working on the various portfolios of the hair oil, as we said, as a company we need to look beyond hair oils, and that's why our attempt to enter into some of the other categories beyond hair care into skin care, which we should start by this year.
Okay, got that. In terms of wholesale, what is our current contribution? And I'm sure we had a peak more than 50% coming from wholesale. So the 2 parts to the question. One is that what is current contribution from wholesale and what exactly we are trying to do? Are we trying to rationalize the pack or we are trying to change the promotion or the whole altogether the reach to the wholesale?
Okay, so as I said, for the quarter, it is now nicely sitting at 25, 30, with retail being 25%, wholesale being 25%, and sub-billing that we do, which is for the rural markets, which is also about 50%. So this is where we are. Ideally, the situation was 20, 30 and 50 wholesale from our urban markets. I mean, directly from distributors to wholesalers. That was about a 30% number as far as we were concerned earlier. Now, while our push for retail will always continue, and we would like to continue to grow much stronger on retail for two reasons. One is because our retail footprint itself is much smaller. I mean, we are a little step behind as far as competition is concerned, as far as the retail footprint is concerned. The other is strategically, it is far more important to be present in the rural, both in terms of width and depth in retail, urban retail, both in width and depth. Given the kind of products that we are launching, we would like, these are more urban-centric products, and we would like a much stronger presence as far as retail is concerned, these advertised brands that we are talking about. So this is as far as the retail this thing is concerned. Now, as far as the wholesale is concerned, I think we have done an in-depth study as to where the losses have been, and most of it, as we discussed, was mainly in the Bihar, UPs and the MPs, where the numbers had fallen from the pre-COVID levels. And these are activation programs that we are doing to reactivate back these wholesalers back into our fold. And there has been some bit of green shoot that we are already seeing happening, and we will continue to do that. So a lot of rationalization of prices. So one of the things that we did as a one-time correction in terms of in the month of January was rationalize prices across markets so that the prices in the wholesale improve, and there is inflation across our streets which go down. So that had its desired impact, and we have seen the wholesale starting to slowly come back. It has not yet come back to the earlier levels, but it's clearly showing signs of improvement.
So my sense is that we have roughly about 80 to 83,000 wholesale across India. It's fair to assume that we would be covering at least 20-25,000 wholesale account at this time.
So again, the way we calculate numbers is we don't calculate the wholesalers that are sub-stockist supply, which is basically a tertiary sale. We just cover the wholesale. We just count the numbers as far as wholesalers are concerned, as far as our urban distributor supplies to wholesale, which is our secondary source. So that number is about 10,000 as far as we are concerned.
Okay. All right. Thank you, Jaideep.
Yeah.
Thank you.
Thank you, Suresh.
Our next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah. So my question relates to more of you introduced a lot of product in last year. And next year, the current year, you want to take them aggressively. So what I was thinking, like whether you have introduced not too many products in this year, means whether you will be able to service all these products in the coming year, or some of these products may remain unfocused over a period of time.
Absolutely right question. So the way it will work is, and that's why if you look at a little closely at the portfolio that we are launching, let's look at the hair oils itself. Hair oils, we are now looking at about 5 products. There is an Almond drops hair oil, which obviously will be continuously supported, and we are looking at renewed focus on Almond drops itself. There is a Bajaj Coco Onion, which the advertisements have started, which is again a brand-led investments where we continue to invest in the brand itself. That I said is a high gross margin product. We'll continue to invest in. And there are 3 other distribution-led brands, which is the Amla Aloe Vera, which is the Sarso Amla, as well as the coconut, Bajaj Coconut, pure coconut. Now these are all distribution-led. So in terms of advertising budget, it will only be restricted at this stage to the first 2, while there will be more of sales initiatives and activations as far as the other 3 brands are concerned. So while in terms of number of brands, they may look high, but not all of them will be media supported. And because we feel that the 2 strengths of Bajaj, which is Bajaj Almond Drops, the name itself, and the distribution of Bajaj, these 2 need to be exploited as much as possible. So some will go through the distribution route, and some where the Almond Drop extensions we are launching, and that's why there will be also graded launches as far as the Almond Drop extensions are concerned. Not too many brands, because we will not be able to support them through media.
So for the other brands like Amla and Coconut, it's more of a basket you are taking to the retailer, and where you will be able to gain some share in that, where earlier you used to just take one product.
So yes, I mean, if you look at through our direct brand sales initiative itself, that 3 lakh retail outlets that we added, there is a good bit of presence that we have. Also direct reach. We have a direct reach today of 8.5 lakh retail, takes plus minus 10,000 here and there. So with that kind of a reach, you would want to exploit it and just not keep the basket only restricted to almond drops. And last year, or the last 1.5 years, we have seen how Amla aloe vera has scaled up well just through that route. And we are seeing even Sarso Amla scaling up in that route. And you see not only us, but even competition for these products, most of them go about in the same manner. In fact, last year, if you look at that entire Amla portfolio, there has been hardly any advertising that has happened as far as the Amla portfolio is concerned by any company. And yet, there has been good growth in Amla. Yes, I agree that has been in the cheaper categories of Amla. Even competition has sold more of the cheaper category of Amla. But that's the nature of the business, and that's the nature of the dynamics of the business. And we'll have to also be aware of the dynamics of the business. So that's what it has been. So we will exploit our distribution and keep selling some of these brands where we can exploit the distribution.
Yeah, great, sir. Thank you very much.
Thank you.
Thank you.
Our next question is from the line of Anup Ramachandra from ANP Investments. Please go ahead.
Hi. Thanks for allowing me to ask a question. My first question is basically with respect to LLP. Is there any thought process that marketing team has thought about to handle the negative feedback that it gets in the digital media spectrum?
So I think as far as the negative feedback is concerned, as we are aware, one of the most popular baby oils is actually 100% LLP, as all of us are aware. So we are looking at how we want to also market that. So LLP as such doesn't have a negative connotation in terms of at least the product being as far as applicable to the beneficial value of the product as far as hair is concerned. In fact, it has a very, 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 very positive impact both on hair and skin. And that's how that most popular brand as far as baby oils, which is 100% pure LLP, works. Now, obviously, there is a marketing side to it. We are looking into how to address that in terms of looking at this thing. This is one area where we have actually identified and taken up as something that we would like to do our communication in, and we are working on that. So LLP does have an environmental impact, given that it is a mineral oil, but clearly it is beneficial to both hair and skin.
I agree with the aspect of it is beneficial aspect, but I'm saying there's a lot of miscommunication also happens from so-called influencers, which may impact our ADHO sales. So that's the reason I'm asking.
It's a fair question, and given that the sensitivity and the awareness is increasing, and there has been clearly negative this thing which been promoted by this thing on LLP itself, there has been buzz in the social media. I don't think the impact of it is major, but clearly this is something that we need to address, and we are looking into it as to how to minimize the impact of the negativity of this thing, or maybe put it in a positive twist itself. So this is something that we are working on. An area clearly identified by us. Yes.
Okay, excellent. And the second question is, basically, what's the company's perspective with respect to Bajaj Brahmi Amla, because that's a brand recall which most of the consumers have, other than almond drops. Like, what's the company looking at with respect to Bajaj Brahmi Amla?
So Brahmi Amla, if you look at, I mean, unfortunately, while, as you rightly said, it had a large recall, but the recall is mainly restricted to the older generation and not really to the newer generation. One of the main reasons for that is, while there are a lot of work that has happened, there is not really any clear ingredient benefit that was coming out of Brahmi, which actually could be claimed as far as the hair is concerned. So it has been a historical product. It has been there from a long time, but Brahmi did not come out. I mean, we have actually worked in our R&D lab to see how we can claim Brahmi as a positive twist to the hair. It did not come out strongly as for us is concerned. So what we have kept Brahmi. So having said that, we understand that Brahmi does have a latent demand, and we would not like to let it completely go. So we are using that product as a strategic SKU in the canteens. Anyway, it's a large brand. We push it, but also in modern trade where we do use it as a flanker brand to protect our ADHO. Brahmi is actually strategically used even in modern trade as well. But as such, if you look at, there's not too much of story as far as the Brahmi part of the Amla is concerned.
I just want to know, how is Brahmi doing with respect to e-commerce sales?
E-commerce, it's not in e-commerce that we push it. It is more in modern trade. E-commerce, Brahmi is not a product that we have. E-commerce, we mainly restrict ourselves to more the premium end of the portfolio, not so much Brahmi. And there is a bit of no-mark sale does happen through e-commerce, but not Brahmi.
So basically on this platforms like Amazon, I know this is what I see is from our research input, what we get is, other than ADHO, Brahmi is the one which is getting a lot of reviews and views.
Yeah, it is there, but that is not what is sold in a larger this thing. There is a lot of no marks, or I would not say a lot of. There is a bit of no marks that is sold, and some of the newer brands which are also getting traction.
Okay. And the last question is with respect to the digital brand.
Yes.
What exactly is the company looking at in a 5-year spectrum? Like, will it contribute substantially to us? Is it company strategizing that in a way that digital brand contributes substantially to our sales, and then do you have any plan on going offline? Or do you want to keep it muted and see how it goes, and then you want to scale it up or something like that?
So as far as the digital brands are concerned, it is more the digital footprint that I would rather talk about rather than the specific brand itself. As far as the digital footprint is concerned, the company does have plans to go further on that. We are looking at both the D2C platform itself and see how that works out, how the costing dynamics work out as far as logistics costs, etc. So that is more a little mid-term rather than short-term, I would say. We are also looking at strategically some other aspects of the digital thing, which I would not like to discuss at this stage, but there are certain other thoughts that is as far as the digital, that entire digital portfolio is concerned. So we'll have to see as we go by as to what we want to do.
Okay. Thank you. Thanks for answering the question. Thank you.
Thank you. Our next question is from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
So just one question on the reach. So what is our current retail reach?
So our urban retail reach is about 2.8 lakh retail outlets across the country. This is the urban retail reach as we define, which is basically what the distributors sell to our urban retailers. If you look at the overall reach, we have about 8.5 lakhs, which is supplied through both the distributors, through the sub-stockists, and through the van sub-stockists as well. That is about 8.5.
Okay. And how much it has gone up in last 2 years? Like whether you have done any significant addition, or it's like you are focusing on improving your scale in this whatever reach you have.
So if you look at again, it has been broken into parts. If you look at 1.5 years back when we did the van initiative, our numbers, direct distribution numbers went up from 5.5 lakhs to about 8.5 lakhs, which is where it has more or less remained. There has been a certain numbers, which are very small numbers, lost in wholesale, certain improvement that has happened in retail. So more or less the overall numbers have more or less remained the same. There's some bit of loss in rural, some bit of loss in wholesale, good coverage as far as retail, urban is concerned. So overall the numbers have remained more or less at this level. So 5.5 before COVID went up to 8.5 lakhs, and it has remained there. Nielsen number still remains at 43 lakhs. Overall indirect coverage as far as brands are concerned.
Right. So any particular target you have, this 8.5 would be going to around 10 lakh outlets by 24 or something like that, target you have in mind?
So we have targets not really as far as, while 10 lakh is a very nice 1 million number to achieve, more than that we are looking at specific numbers. It's a little more granular, the kind of numbers that we want to approach with. So we're looking at zone-wise what kind of channel distribution numbers we would want to achieve in the next 2 years or so. And those numbers we have for us. So those numbers will be a little substantially higher. I would not like to discuss specific numbers at this stage.
Sure, sir. Thanks.
Thank you. I would now like to hand the conference back to the management for closing comments. Over to you, sir.
Thank you. So, while I understand that the last quarter was a pretty tough quarter as far as business is concerned, we had taken this correction in January, so the numbers for the quarter was a little lower than what it would have normally been. But this one-time correction has clearly seen positive results for us. So we are hoping that this quarter, which has started well, would end well also for us. And as rightly called out, we will continue to invest as far as our brands are concerned, and hence, as a result, for the next 2 quarters, we feel that the EBITDA will remain muted. But if we are able to get traction back into our brands by the time the raw material price cycle turns and the demand cycle turns, we should be seeing both positive sides as far as our business is concerned. So with that, I would like to end my comment and thank you all for joining.
Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.